Welcome back. Can you hear me? Are you wearing the earphones tight enough to hear me loud and clear today? Very important, okay? These tips are very important for anybody. For anybody, I'm telling you, these tips are a major factor for you to earn money in the stock market. And please watch it till the end because you may be in for a surprise in the end because the end is the most important. The first and very important aspect of investing, rule number one, when it comes to rule number one, is a very important aspect, and the last rule also, the fifth rule also is the most important aspect. But let me talk about the first rule today. I meant today in the sense like all five rules will be explained today, not in separate videos. So when it comes to the first rule, the major rule of investing is to understand the company. When we go there out purchasing stuff for our household, what do? We buy random stuff? No, right? We try to understand whether the brand which we are buying is going to be durable enough for a long period of time. If I'm going to buy, like a cheap leather shoes, I said leather, but maybe cheap leather, it could last just for a year. I have been buying shoes, with like costing around 1,000 rupees. About 500 rupees in fact, and they have lasted less than a year. And when you just double the expense, you buy a good branded shoes, maybe a Reebok or maybe Bata, whatever. When you buy a branded shoes and it has a good reputation, a good quality aspect, kept in mind for all its customers, you realize that the shoes run for about 3 to 4 years. When we think about quality, brand, durability of the product, when we purchase something for ourselves, so when we purchase a company or a stock from the stock market, we need to understand what these companies sell into the stock market, right? Are they selling a durable product into the stock market? Are they selling a product which is having a share of the consumer mindset? Whenever you think about a product, you think about Reebok. When you think about shoes, right? When you think about brushing your teeth, you think about Colgate. Where you may settle for anything else. You may settle for Dabur or whatever it may be. But the quick thing which comes in your mind, even though you may be having a Dabur toothpaste in your house, you see from the background of the mind, you say Colgate. That's the importance of the brand. So very important aspect when you select a company is to understand the brand and the products which the company sell, whether it is durable enough, whether these products are going to be, taking its own share of history or not. Are they going to run long enough, like for 50 years and beyond until you retire? You need to think from that perspective. And also when it comes to services, well, this I talked about the product, but there are companies which sell services. So these services, when you talk about services, we need to understand whether these companies have an entry barrier into the market and whether they have a good monopoly. It may in a duopoly economy. Like for example, you have as an example, rough example, okay, not promoting any company in this particular video. It could be like CDSL and NSDL. These are the two monopolies existing, and out of this you can check, which are having the most major market share, and depending on that you can choose your investment. You could in fact invest in both of these, so you get 100% of coverage of market share, isn't it? So reiterating back, the first and very important point of investing is to understand the products which the company sells, understand the durability of the company, understand the monopoly of the services. and how long the company will be in existence. The second aspect, which is crucial, let's take an example, by the way. When we talk about buying a washing machine, as an example, roughly, we think, we may be paying 1,000 rupees per month to a maid to wash our clothes, and 1,000 rupees a month works out to about 12,000 for a year. If we purchase a washing machine, maybe today it might be costing about 24,000, meeting just the requirements of wash and certain other aspects of washing. So you recover within just maybe 1.5 years to 2 years, right? I mean, most of our mentalities work that way. At least I work that way. Maybe a lot of people, in fact, at least I feel men, maybe women also, have a similar mentality to understand what could be the return of buying a particular asset. The returns could be monetary, the returns could also be from a comfort or leisure. From a comfort and leisure perspective, you could improve your efficiency. That could also be one sense of returns. So you measure the returns, right, on your investment. So when you select a company, by being as an owner in the company, you would expect the company to earn good returns. That is the second aspect which most of the investors should enter into the shoes of a businessman, as if that company is his own, and check out the returns. And not to forget, the consistency in the returns is more important than just the return. The consistency in return, a range bound returns more than a specific amount. You can choose the amount yourself, and you can see what kind of returns you are expecting from the company, and depending on that, you can select based on the returns made by the company. That is the second aspect. The third aspect, the third rule of investing, is you need to understand how much the company is earning and whether it has taken debts. And why this is important? Why earnings and debt? A lot of people say equity debt ratio. Well, this is oversold in my view, because I could have a equity to debt ratio around 50%, but if I'm able to pay back the entire debt within a single year, why shouldn't that company come in my radar, right? In fact, the more quicker the company can pay its debt, the company is economically viable. It's having a significant moat, a significant competitive advantage, and hence you should go and purchase such companies which are having a significant earnings over its debt. The fourth aspect, what would you want? In an inflationary environment, do you want the companies to keep the same prices? No, right? You want the company to increase its pricing so that you can get an advantage, right? You can gain, the company could still continue to gain from the inflated environment, and when the inflation comes down, voila, you have more profits. So you need to see those companies which have good pricing power and also supplier advantages. When I say supplier advantages, in the sense that it could delay payments to the suppliers for a good duration of time, and wherein it can employ these earnings into certain other investment to gain returns further on. So this is the fourth aspect which you need to look: pricing power and bargaining power with its suppliers. And the fifth, the most important, if you have watched this video till the end, good job. After you have selected your companies, you need to hedge it. You need to put a fencing around the equity stocks. Isn't that important? We think about protecting our kids' education. And how do we protect it? We put our money into fixed deposits because it's a protected investment, right? We put our money into buying properties because our visualization is that our cash is protected because it's a real estate. And when I say real estate, I'm talking about the physical land, not the flat. And it could be various other assets available to protect or hedge your equity investments. And this gives you a diversification of the assets. And when you have diversification of the assets, you're well protected, you're well insured, and you can bet upon certain aspects doing well at certain point of time, and you can gain advantage from certain assets being rising, and so that you can buy cheaper assets at a specific point of time. So these are the 5 aspects which I wanted to share, the 5 rules of investing, and I hope you have enjoyed this video. I'm sure you might need to know more maybe. If you want to know more, please feel free to get back via the comment in this particular video, and see you in all my subsequent videos. While I'm looking at the camera, I'm trying to imagine that I am talking to you. That's why you may feel that I'm not looking at you, but in fact I'm looking at you, which is myself in fact in the camera. But I hope you don't mind. So see you in my subsequent videos, and keep liking my videos. Bye.